So we've got lots to cover in this video. It's going to be the Wednesday midweek Discord requests. So we've got all of your chart requests here, some absolute degen plays that I need to cover. But ultimately, where are we in the market? We've pulled back into a neutral territory now. That's good. Things are coiling up, guys. And what you need to understand is markets move sideways more than they move upwards, more than they move downwards. So as far as the trend's concerned, is the trend intact? Because Ethereum, once it breaks through the 200, once it breaks through this bull pennant, we've got less resistance as we start moving up towards its all-time highs. So Bitcoin's pulling back. Ethereum is starting to outperform Bitcoin, the second market cap leader, and that is bringing down the dominance. This is what we want. This is what we said was going to happen. And Ethereum, Bitcoin, look what's happening, guys. We're breaking out here. So if we take out this previous high, come and test the 200 daily moving average on the Ethereum against Bitcoin chart, that is going to create a big surge in altcoins. And I've been saying it for a while now, guys, but the conditions haven't been met. They're starting to be met. And that's what we need to be talking about. So I have got all your degen plays. We are going to be covering all them. We are going to be covering them with caution. We're going to understand exactly what needs to happen, how you can protect yourself, and using risk management as a technique that can help you during this crypto bull market. So firstly, a big thank you, 9,185 subscribers, 9,185 of you believe in me. So thank you for that. Appreciate each and every single one of you. So this one, it is going to be about your degen plays, but it is also going to be about risk management, because you need to understand exactly how risky an asset is that you're looking to invest in. I am not going to say invest in any of these. I am not going to say invest in any cryptocurrency. I will show you what I'm looking at and will show you what I'm doing. I will show you how to use risk management techniques. And the more importantly, guys, this video is going to be about understanding how risky Drift is, understanding how risky TARS AI is. Why is that important? Because the higher the risk, the lower the allocation. Remember your pie chart, guys. Your pie chart has got to be able to sustain high risk losers. If you expect something to go to the moon, guys, and you've got a high allocation of that, that thing is in the high risk category. That thing could go to zero. That means all of your capital's gone. So make sure that the higher the risk, the lower the allocation. So I'm going to show you exactly how you can do that, how you can understand exactly how risky something is. Before that, we need conditions to be met. So we need the macro conditions to be met. We're going to look at the macro within crypto, outside of crypto, and then we're going to look at your altcoins, because it does go hand in hand, guys, not just with risk management, not with the risk curve, but the conditions that need to be met before these higher risk altcoins can run. So we start with Ethereum, and we said before in the last video, or in the last two videos, Ethereum needs to break through this 200 daily moving average. It's sat at 2,672. Once we break that, you've got a higher probability of breaking out of this bull pennant. And once you break through that, you've got resistance sat at $3,324. So $3,324, the significance of that, guys, is once we break through here, that comes back, acts as support. That's given confirmation that the bulls have regained control and Ethereum is ready to run, and Ethereum's ready to run hard. And when Ethereum runs and starts outperforming Bitcoin, it brings down the dominance. So this is what we want, guys. We want this lower high. We said this is a 3-bar reversal. You've got the doji in the middle, the lower low, lower close candle. Expect this to come all the way back down to this trend line here, and then see how price reacts, because ultimately we want a rejection and then a big push to the downside on the Bitcoin dominance. For that to happen, Ethereum needs to start outperforming Bitcoin. So we look at the Ethereum Bitcoin chart, and you can see here, guys, the trend is getting broken today. So if we get a daily close above 0.02477 Satoshis, that means that Ethereum is going to start outperforming Bitcoin. It's going to try and take out that previous high. Once it takes out the 200 moving average at 0.02791, then Ethereum will start outperforming Bitcoin, and we will start an ETH season. This is the last time that we had an ETH season. Remember, within an ETH season, you get an alt season. Within Bitcoin season, pretty much everything bleeds against Bitcoin. And that's exactly what's been happening for the last few years. So Bitcoin's the least risk asset. That's why Bitcoin needs to lead the way. That's what we said earlier on. Bitcoin has led the way by a long shot, guys. Bitcoin's got mass adoption. Bitcoin has led the way. Ethereum's been shorting, but it's starting to outperform Bitcoin. So the conditions are nearly met. Not quite there yet, but they're nearly met. Total 3 is the big one. This is what we want. We want this to hold. We want this to maintain a higher low. We need it to take out the 200 moving average at 894.21 billion. Once we do that, guys, we can start making them higher highs and higher lows. Aim of the game is to take out previous all-time high, the 2021 bull run. That is my time to scale out of the market. So USDT dominance, you can see that we've had a push. We've had a push up above the 200. We're holding the 200. So we're above the 200. We need to lose the 200 on this, push to the downside. And that means that people are buying alts with their USDT, bringing down the dominance of USDT. So that's the dominance of the dollar within crypto, and start pushing that to the downside, because altcoins will start pushing to the upside, start taking out the dominance of USDT. So the Dixie, guys, the Dixie has been absolutely bleeding. It's been bleeding. It's at a support shelf now. And if we drop this support shelf, expect a big surge again in altcoins. So you can see, guys, the conditions, as far as the macro are concerned, they're starting to be met now. We can start seeing Ethereum outperform Bitcoin, but they're not there yet. We're still at some resistance points that we need to overcome. Now, this was the big scare, guys. This is the VIX. This is the volatility index of the S&P. What happened on the back of that is the S&P dropped. You could see we've had a big recovery and a bounce on the S&P. We're pushing up to test previous all-time highs very shortly. So that's going to give confidence in the market, guys. Right, that's the macro. Let's jump into your altcoins. So we're starting with Tau. And you can see in the last video, we were doing this inverse head and shoulders. This is still playing out, guys. We are testing the 200 moving average. That's sat at 402.70. Once we break above that, we can test this neckline. Once you break the neckline, remember, projections all the way up here, $825.10. How do we measure that? From the tip of the head to the neckline, and then you project that on the break. How risky is it? Let's have a look. Tau. Get yourself on CoinGecko, bit and saw, Tau, and then you can bring that up and you can look at all the data on there. You could see it is ranked 40 out of the whole of the crypto market. So if it's ranked 40 out of the crypto market, make sure that you use your allocation wisely and know that that is pretty high risk. It's not too high risk, but it is pretty high risk. If you had $1,000, if it was me that had $1,000, I'd probably put $30 in there of a portfolio. So that's bit and saw. That's how you can check, guys. Tau. Drift next. Pull up the indicators, guys. One thing that you can see here is we've got oversold position here, oversold position here. We talked about in the last video how you can tell. You've got oversold position here, oversold position here. And you can see you've put in a higher low. That's strong. So we've got the resistance barrier set at 86, nearly 87 cents. Once you break above that, you start seeing some strength there in drift. How risky is drift? We can look. Drift. Do this with every single one of your cryptos, guys. What is it? Drift. I'm assuming this is the right one. 334. So risk 334 at the crypto market cap. How much has it got? 170,574. It's a low cap, guys. If you've got $1,000, $5, $10. So you can see how you use that and how you go down the risk curve. The higher the market cap, the less risky. So this is TARS AI. We'll have a quick look at that. How risky is that? Done a couple of videos recently on TARS. So just bring that up quickly, and you can see it's got 71 million market cap and it's 589. So, use the allocation of your risk wisely. It's a high risk market cap. As far as the market cap's concerned, use it wisely. So if it's high risk, guys, less amount, easy. This is trading in a bit of a upwards wedge at the moment, guys. So it's got resistance at 0.18. Once you break through that, you'll see a bit of an acceleration, but that's not there yet. Got Giga next. With Gigi, you can see it's a bit of a grind. We've been creating a bit of a staircase move, guys, where we're putting in just about higher highs and higher lows, and we're grinding towards one area. This is the area. It is the previous support base of this bullish move here. So that, along with the 200 daily moving average, we could just add that in here. You can see this is going to be a strong key resistance point. You can see it's been rejected in the past. It's been rejected in the past. We just stick a zone on there, guys, and that helps us from the bottom of this move here all the way down. That is your resistance point. That's sat from the bottom, 0.03142, to the top, which also coincides, guys, with the 200 daily moving average, 0.03600. So can you understand exactly what I mean, guys, why the macro conditions need to be met? Why Bitcoin or Bitcoin dominance needs to maintain this lower high? Why Ethereum needs to start outperforming Bitcoin? So before we start breaking these big major trends on these high risk altcoins, guys, Those conditions need to be met first. So it is a patience game. It is a waiting game. Next, Arcos. What the hell is this one? Arcos. Let's have a quick look at that. Is it Arcadia? Is that the right one? Wrapped ETH. Guys, what I would do on that one is flip a coin. It looks pretty high risk to me. 3,259 as far as the crypto market cap's concerned. 1.4 million. 1.4 million, guys. Next to nothing. Flip a coin on that one. I haven't got a clue. I don't know. Put a wedge pattern on there. If it breaks to the upside, it's bullish. To the downside, it's bearish. Or flip a coin. You might get a higher probability. Right. Okay. Toshi. So you can see we've got a strong base here. We've got a strong base here. This base was support, 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 pulled through. We broke through. It acted as support, support, support. We broke down resistance. So that key area is 0.00006016 on Toshi. One thing that you can do on here, guys, is understand that we are oversold. That is a good thing. We're holding a base here for 1, 2, 3, 4, 5, 6 days. How do you know when this is going to be a low, guys? Ultimately, you don't. You can stick a trend line on there and you wait for a break. That break's going to confirm that the bulls have got momentum in the short term. So you're waiting for a break. And what's that do to your risk management? You put your trend line on there. Where are you shooting for? Previous high. If you're shooting for the previous high, what does that do to your risk to reward? 2 to 1 risk to reward. But it gives you a high degree of confidence that the bulls have got momentum. There's a high chance of this coming to the upside. As it comes to the upside, guys, you can either ride it up and put in higher low trailing stop losses in, or you can just bring your stop loss to break even once you've put in a higher low. You can bring your risk down. And as you bring your risk down, guys, that diminishes your risk and that allows you to live to fight another day if you're wrong, because it's a probabilities game and you could be wrong. So that's how you can play it, guys. And you understand if that is not the high, if that's not the low, you want to be out with a limited amount of capital possible. So use risk wisely. Next one's going to be Theta. And Theta has actually dropped a key support barrier where this was support here for a long time. We went underneath and we managed to break through with some velocity. You can see here where we were overbought. We needed to pull back and we pulled back. Unfortunately, we didn't maintain this higher low here as the stochastic come back. So we dropped this key level, and this key level is resistance now at 84 cents. So the key is waiting for the break on this one, guys. You've got another resistance, 96 cents to $1. Once you break $1, if we just zoom out, the next resistance point, $1.47. So once you overcome here, guys, you've got the next resistance point, which is a 32.83% move. And remember, once we break this 200 daily moving average sat here, that creates the volatility and that creates the confidence within the market for people to start really putting in their buy orders, because retail guys understand one thing. They understand simplicity. They understand 200 daily moving average. They understand trend breaks, diagonal trend breaks, the very basic things within trading. And that means that when a lot of people are putting their eyes on the chart and they're looking at these basic things, that means that they've got confidence to start buying these things and buying these things because these retail indicators are being hit. So Theta, it has got some resistance to go by. Once it gets above that, then I can start putting projections in for those higher highs and higher lows. We're not there yet, guys, unfortunately. Injector. So Injector's pulled back now. You can see this is a bit of a danger zone, similar to the Jasmine video that we've done earlier. Put in a higher low. It's come back down. It's tested its higher low. It's done a double bottom at the moment, but we do need to overcome this $16.35, which is also the lower high here, guys. If you look back, zoom out, that's the lower high here. That's the rejection point. That is also the 200 moving average. That's going to be double confluence. And if we do get a push up here, put in a new high, that's going to be your rejection zone. That's sat at $16.77. Once we do overcome that and hold that as support, little resistance, little resistance. So Pith Network next. Don't forget to go on to CoinGecko, guys. Check how risky these things are. You're waiting for a break on here, guys. We did drop a support base and you can see that this is acting as resistance now. So the resistance barrier on this is 12 cents. Once you break the 12 cents, you've got the 50 and the 20 period moving average. Once you break those things, then expect all the way to 25 cents on that one. So that's going to be a big swing. But it is a high risk one. Check the risk curve. An S fund, you can see it's grinding its way up on here. One thing on this is stochastic oversold. This level here, stochastic oversold. We've come up, stochastic oversold, and we put in a higher low. So that's strong. You've got your resistance point, $1.09, between $1 and $1.09. That coincides with this previous shelf here. Right, okay, that's about it from me for now, guys. Let me know in the comments what you want me to cover next. Jump in the Discord group. For next Wednesday's video, I'll do an altcoin marathon, and this thing is going to be packed next week. So make sure you get in there, have your say. What is it that you're investing in? What is it you're looking to invest in? I can't give financial advice, but I can look at the chart. We can understand risk management techniques, portfolio diversification. So that's about it from me for now. Subscribe to the channel if you did find this useful, and see you in the next one.